Okay, good evening, everybody. Tuesday, 17th September, 8 o'clock. Hope everyone's well. Hope everyone is good. Hope you can all hear me, obviously. This will be a short one tonight. I actually promise you it will be. I had some dental work done today, and my mouth is still killing me. So I am going to try and get through this in under an hour, if we can. Hopefully that won't detract away from what I want to talk about. But obviously we've also got the cuddle on Saturday, so be able to catch up with plenty of you there, talk about this if people are interested in, or just generally life in general. Anyhow, what are we going to focus on tonight? Well, I will really skim through the news and we'll talk about Bitcoin price, obviously, but let's address the elephant that's in the room. FOMC meeting going on right now with the federal rate announcement tomorrow. Why is this important? Well, for the last 2 years, we've seen one of two things happen. We've seen Chairman Powell stand up there and either increase interest rates, keep them the same, and just give the same rhetoric. Well, there is an incredibly strong, almost 100% chance that we are going to see that final rate cut tomorrow. And I mean, if you believe crypto Twitter, all-time highs by the end of the month. And we're going to have a talk about that. We're going to have a look at what the rate cut could mean for Bitcoin. We're going to compare it to traditional markets. We're going to have a look how previous rate cuts have affected the markets. We're going to talk about what actually spurs markets to move up and down following rate cuts, how long they typically last for. We might even touch on the dreaded R word that is a recession, and just see where that is. So a lot of the focus, unfortunately, will be on that. And I will mention this again a little bit later on, it's fair to say that tomorrow's FOMC meeting, even if you don't really care too much about the wider macro financial implications of all of this, it is an important one, because this is all about confidence. This is all about, has America got their economy on track, and are they also dealing with it in the necessary way to either prevent a recession, or are they going to take us into one? And that is going to have an impact on Bitcoin, ultimately having an impact on the rest of the crypto market, and unfortunately having an impact on our portfolio. So whether or not you really care about FOMC meetings and the federal rate, this one is an important one. Tomorrow, 7 p.m. UK time, we will get the federal rate, we'll get the press release that goes with it, and then 30 minutes later, we will actually get the press conference. And as I've always said on every FOMC day, it is a volatile day. We'll go over all of that a little bit later on. We'll then touch on altcoins, a couple of questions that have been asked, which one of them is just basically the whole topic of this, so hopefully I'll answer that. And yeah, we should round that one up. But let's just dive straight in and let's have a look. So Bitcoin, it's last couple of weeks pretty good. It had a slow start yesterday. Matter of fact, we actually saw a fairly decent drop in price yesterday. But once the markets opened today, actually, it's not fair. It started moving up a little bit earlier, but we saw it up above 61,000 earlier on today. We are still trending on the weekly chart down. I don't care what you say. 2 days of bullishness does not change the pattern. It is lower high and lower low after lower high and lower low. So until that really breaks, which at the moment is kind of sitting in and around on the weekly chart, at least 64,500, we're just in a pattern that we've seen for the last 6 months. Ultimately, as we've talked about multiple times, it is a relatively bullish pattern, bull flag. I don't think it's a compression of such, but sort of this just consolidation period that we've seen in many pre-bull years before something moves up. So nothing really too much to fret about. Obviously, from a daily point of view, fairly good move over the last day. Although that 3,000, just above 3,000, has retraced a little bit. Casper still performing well. We talk about the same thing every week, still moving up. I know there's talk at the moment about 3 or 4 days for it to sort of reach a new all-time high before we can negate this trap 5 that everyone's talking about. And I mean, tomorrow, depending on how it goes, that could well be achieved. Absolutely could be achieved. But it's still one of the most positive cryptos that are out there. I've dumped it. I've got rid of Ethereum. It's a pants altcoin. No point talking about it anymore. Not quite actually why, but Ethereum's just doing bad. Very bad across the board. But I actually wanted to put the S&P 500 up very briefly. I'm going to zoom this one up a little bit higher, because for the briefest of moments today, I can assure you it did happen. We had an all-time high. Only just, but we had a new all-time high that formed on the S&P. Now that has retraced since it's gone there, but markets moved up that way, and I dare say that we may see that new all-time high be reattacked later on. I haven't brought it up, but gold also hit a new all-time high. I have to try and find that because I've mentioned it now. So again, gold still performing at all-time high levels. NASDAQ, not so much all-time high. In fact, that one's been struggling a little bit, but then again, the video has also. And the Dixie, and we will just talk about the Dixie because the Dixie has been moving down. It's basically on 101 at the moment, and as you can see, for pretty much the last 2 and a bit years, this has been the general baseline. I don't even actually need to draw a trend line on this one because its current price red dotted line is pretty much hitting where the best baseline has been. Now, we've always seen strong bounces over the last 2 years once it's hit that level. So, you know, it could well be that we actually do see a bit of a surge in the dollar. But should we lose that, I think the real level that you'd be looking at is 100 bang on the weekly chart, and then a break of that. And it's kind of free fall, really. Then we are sort of falling into the territories of 2021, 2022, when the dollar was just rampantly climbing up, and we may see some levels there. But right now, it's cover level. Not surprised we are seeing a little bit of a support, it's going to call resistance, at this level over the past few weeks. But we really just need to see how this one plays out. Jumping back out of that and into our beloved Tau on the weekly. Again, very much like Bitcoin, in the sense that we have had a good, strong couple of weeks. Again, yesterday, not exactly the best of moves, dropping back down to like 282. But again, another strong move today. But it has actually run into some levels. And for those of you that just recently been on Discord, I was in a trade in Tau for like 17 hours because I bought yesterday 50 EMA. It smacked into the 200 EMA. I've got just jumped out of it. It was a very planned short-term trade. I didn't go fully back in. It was just a little bit, just because I thought it was balanced. It was reacting quite nicely off that 50 EMA. We'll have a look at that one in a bit more detail when we talk about Tau. But what I will say is it's kind of looking a little bit like Casper now. I appreciate over a shorter time period, but actually what we're kind of seeing on the weekly at the moment is higher lows and higher highs, just up here. I think on the weekly it shows it, maybe not so much on the daily, but we are starting to see that move out there. So maybe we might actually start to see some strong move out. Maybe the bears that have pushed this price all the way back down have now exhausted their buying at the bottom. Whatever suppression has gone on, we can actually see some growth through within this. But what I will say when we look at altcoins, and I don't have it on because I flipped it over, but if you look on the right hand side of the portfolios, generally down the right hand side, looking at the far column, that's percentage gain in the 24-hour period. And Tau is pretty much running amok, apart from Tau Inu, which at 12% increased on the day. Tau is at 9. Other notable ones at high levels, I suppose we've got Near at 7, Fetch at 6.5. But most of them are in about the 3 and the 4. But Tau's definitely leading the pack on the ones that I follow. I'm sure there's plenty of other altcoins out there that have done well today. Let's not do that. Let's just quickly cover some news. And I will be very quick through this. Sorry, I should have said there's a little bit of a poll going. I mean, there's definitely a bit of uncertainty at the moment in terms of where the rate cuts may fall. 25, 50, 75 people are suggesting, or maybe a left fielder, no cuts. But feel free to add what you think at the moment. We're currently sitting at 50-50. But we'll have a look at that one a little bit later on. Maybe opinions might change. But into some of the news. So one of the things that we kind of covered in Discord, I suppose, a little bit, was just the new bill that's been introduced into Parliament, and it has actually gone through, that basically says that cryptocurrencies are personal property. Not going to go necessarily through that, but it is a step forward. I'm not necessarily saying a step in the right direction. The devil's advocate in me kind of wonders how that can be used against us later on. But within 24 hours of that rule, we actually saw a court use that rule, that law, to deem that Tether was a property in the first English law post-trial crypto ruling. This was in the UK High Court has ruled that stablecoin Tether is property, the first ever ruling in English law. The legal status of Tether was a preliminary issue in a case brought by a fraud victim whose stolen crypto, including Tether, was offloaded through various exchanges and put through crypto mixes. So we are already seeing this rolled out. And okay, I do think maybe there is some benefits to this in terms of sort of how people can try and claim that back, etc. But part of me also just has that, how are they now going to use that rule and that law against us? We'll have to just wait and see. But an interesting one nonetheless. Speaking of the law, and we've missed this guy, we have CZ. CZ was actually set for release from prison on September the 29th after serving, well, it's actually nearly 5 months of his 4-month sentence. So I don't know the exact time he went or date he went to prison, but the court case kind of adjourned end of April. He actually got moved to what I would call almost like a halfway house kind of thing in August. A residential re-entry management scheme is what they're calling it here. But the paperwork is being filed, and it now looks like September the 29th, the former CEO of Binance will be released. And it's damn sure we need this man. I mean, we didn't realize we needed him, but we did. This guy went to prison and the altcoin market absolutely dumped. Let's hope that him coming out just before October is the catalyst we really need to boost our portfolios back up. But all jokes aside, he's done 4 or 5 months of his sentence, and now he gets to live his life spending his billions. So there we go. Another quick news, MicroStrategy, they were at it again yesterday, announcing that they had purchased another 18,000 Bitcoin, holding about $14 billion worth, and I think it's about 245,000. So they are continuing to buy. Don't care how, don't care when. They're just going to buy. So good on them. But what is interesting is they've also, off the back of that, sort of announced that they're going to do another third debt offering, trying to raise another 700 million to, you guessed it, purchase some more Bitcoin. So that's what they're going to do. They've used this twice before. It's been very successful for them. So they're going to continue to do that. I don't think they'll ever quite catch up with BlackRock, but they're doing a damn fine job of just buying whenever they can. And yesterday, when this was announced, I was kind of like, he's done it again, Saylor. He's announced it and the market's dumped. But to be fair, today the market has rallied and surpassed yesterday's opening. So maybe this time the opposite trading of a MicroStrategy announcements just hasn't really worked, unless you were doing it short term. And then finally, and we're going to talk about this, but I'm not going to go through the article because the article's irrelevant. I think just the headline says it all. Volatility ahead of the interest rate decision. And we may be 24 hours away from it. That still doesn't mean there's not going to be an incredible amount of volatility between now and then. Matter of fact, even this move up, which although potentially could have been on the cards, it has been a very strong move up with not too many pullbacks. So, you could argue that in the next sort of 22 hours before or 23 hours before we get the announcement, we may see some movements up and down. And if that's the case, there's plenty of opportunity to take advantage of that through trading. All I would suggest is just manage your stop losses. Make sure you don't put too much risk on the table, or just sit it out and just wait to see what the market decides to do. Either way, that's where we are with that one. Moving on to Bitcoin's price action, we'll talk about this on the higher and lower timeframes for a little bit, and then we'll get into the FOMC stuff and federal rates. But yeah, so what have we seen? Well, okay, the last week since we last spoke, we had that move up to 60,000, kind of at the 0.5 level on the fib that I've been tracking since March. And then it's moved back down over last week, over the weekend, dropping down to 57,500, which is bang on the 382 line. And we've seen over the last day this strong move back up. Now, it has actually breached through the 0.5 level again, but the candle hasn't closed yet, still 5 hours to go. So we'll wait and see. But what I will say is, should we have a strong close above this and it's built upon tomorrow? Because again, we have occasions where it closes above it, but if you can't sustain it, then that's why we discount it. So, that's why I don't immediately go in at some of these levels, and that's, makes sense in my mind anyway. But if we can build over this over a few 12-hour candles, then obviously for me, the 618, it being the golden ratio, is the target I'll be looking at in 63,000. And then we're looking at trying to break this higher high or lower high that was previously formed, turning it into a higher high, 64,000. And again, once we've done that, I wouldn't say we're laughing as such, but we are starting to see whether or not we're breaking this trend. moving into a stronger direction the way we go. I've updated the liquidity levels based off high block. So these ones are relatively new. These two, well, this one here, 67,000, 65,800 has actually been here a while. The 52 to 50,000. Generally, that's kind of got, I mean, it's been here since the drop beginning of August, but it's got a lot deeper, a lot darker, a lot yellower, whatever you want to call it, in the last few days, as people have started to try and build off the momentum of the move down in the beginning of September for some long positions there. So we're kind of in the middle of both of those. I don't think there's any real direction that's come to that right now. Matter of fact, we haven't hit either of those two levels since the beginning of August. And with plenty of room to run on either side. My actual focus right now is probably just on the fib levels and the 60,000 just psychological level. I think, you know, I mean, where are we with 60,000? It's in white, of course it is. You can hardly see it. What's going to stand out? Probably not even that. But let's just do it as a line. That kind of level there. There's plenty of action in and around that one. And this on the 12 hours. Just throw it on the daily. But yeah, I mean, this fib level is kind of perfect for it. But over the entire time, you can see the amount of action that it's had in and around there. So it takes a lot of work to get through it. Yeah, we might peek our head over, but to actually get above it and build something from it, that's going to give me confidence that we can at least make that move up. And until that happens, unfortunately for me, this is just another rally, which, you know, could end up failing. I mean, on the even shorter term, and we will go and have a look a little bit later, I need this candle to close above its current level now, just so we can take out this. That's 60,500. Let's just call it 60,600. Close around that level. At least we can say that it's still climbing upwards rather than rejecting down. But that's where I'd be looking from that. This is high block on a much smaller time frame, a shorter time frame. And as I said, look, you know, this is really starting to get yellower, greener, and it's over a couple of days here, but as recently it's gone up. But actually on the lower time frames, it's quite a lot. Now, it looks darker because each, you know, there's not as much liquidity being represented by each bar. So they can be yellower, but there's plenty actually between where we are now and 65. So when you go on those higher time frames, so that kind of like drops away. But there's still targets, plenty of targets for market makers to have a look at on the way up there. So, you know, tomorrow, as I said, with a volatile day, a move up there, false move up, get everyone going long, and then reversing that one back down makes perfect sense in my mind there. But I think, unlike most of the time when I talk about show me a chart and I'll tell you the news, I really do feel that in this instance, actually what the Fed say is going to have a massive overriding effect. So maybe the market makers aren't really dictating where things are going. Maybe they're just having to position themselves as well, which interestingly enough, BlackRock, after a 3-week spell of not buying, have actually started buying. So they bought $15 million worth of Bitcoin yesterday. I have checked on chain. They've currently acknowledged buying about $16 million worth of Bitcoin today, but of course they've still got more hours in the trading day, so I have to wait and see. But they had gone over 3 weeks beforehand without buying anything, and they've now decided that it's time to get back on that horse and start buying. I'm not necessarily saying they know something we don't, but they're probably at least hedging their bets to just keep on accumulating now, because of the uncertainty that we're not sure where things are going to go from next week. I haven't bothered bringing the Ethereum one up. Matter of fact, I've mentioned it, so we might as well have a look. Ethereum, again, BlackRock, I mean, they've not actually gone on a longer hiatus with Ethereum as they have with Bitcoin, but they were buying again yesterday. But still, I'm not so enamored with the Ethereum ETF. It's not had the punch that everyone thought that it would, which kind of coinciding with the fact that we've been in this Bitcoin season for so long that you know, altcoins just haven't really felt like the right move. Had this have launched back at the beginning of the year with Bitcoin, maybe that would have been a different story. But what is interesting when we look on the Bitcoin altcoin season index, and you could argue that anything under 25 is Bitcoin season, anything over 75 is altcoin season. But we can actually see, funnily enough, and we're going to talk about Bitcoin dominance a little bit later on, but altcoins have actually started to move up, or the alt season index has started to move up, despite Bitcoin dominance reaching 58, local highs. I say local highs, local highs for the past few years, and continuing to climb. And the reality of that is because before, Bitcoin used to be much closer towards the green, it's over the last 90 days, but actually there's more altcoins that are starting to move to the left now, overtaking it. And we have had some big moves. We're at, Casper's up there. Tau's actually finally gone green. And whilst I do celebrate the fact it's gone green, the last few 90 days, and so probably 180 days, it has been just a bloodbath for Tau. So a 3% in the green over the last 90 days, great. But unfortunately, the fall we've had since March, not so enjoyable. But the point I'm trying to make here is Bitcoin is just starting to slightly slip against some, and it's only the top 50. Okay, when we look at Bitcoin dominance, it's against the entire market, including stablecoins. So that's why it's potentially a little bit different there. Going back onto Bitcoin and potentially having a look at some small time frames. I'll be honest, this is what I thought I saw earlier on this week. Let's just do that. So I was looking at this chart. This is what I use from a market makers. Some of you may be able to visualize what I'm going to draw right now, but I was kind of thinking, oh, it looks like we've had some sort of bottoming pattern there, double W formation, maybe a rise up and consolidation, another rise up and consolidation, rise up, then an M formation, drop down. I was like, okay, that makes sense. We've had the W. It's on the 1 hour, by the way, but it's also present on the 4 hour. But on the 1 hour, it makes sense because the 1 hour, that can take place over a couple of weeks. And I thought, yeah, that makes total sense to me. And then we've had the reversal pattern and we're starting that drop down. Didn't know where the drop down was going to end, but it did look like it was there. So I was kind of in my mind thinking, right, looks like we're on for a few moves down here. Maybe that's going to coincide with what I'm talking about with rate cuts a little bit later on. But something changed. The narrative suddenly changed. And actually, that happened. And with this move up, that has to negate this M formation because we've now gone higher. And so I'll be honest, I don't really know where this pattern is sitting. Let's just get rid of these drawings at the moment. And we'll try and, there we go, remove drawings. So now it's a case of, okay, well, am I needing to be on a higher chart here? This doesn't look like an M to me here either, this down and then up. I think I'm stretching for that maybe to be an M. So maybe I've just got it all wrong and actually W, move 1, move 2, maybe this is move 3 and we need some form of M. It being a 4 hour chart, the M itself could take a matter of weeks to play out. So I'm kind of just going back, taking a step back at the moment. I'm just going to wait to see what tomorrow brings before I try and reevaluate where we may sit on that one. But yeah, I was fairly confident yesterday that was the case. Just going back onto the 1 hour, what I will say though is we've kind of moved into this. It has, this was a strong move up, from early hours of this morning. So Asia kind of time, Asia close, moved up very strongly. And then the US opened it and it has really kicked in. And it is not surprising, actually, after 2 strong green vector candles that we'll see some form of pullback. On the hourly, we don't spend too much time away from the 50 EMA, but this price action has really left us behind. We got up to 61,500 and the EMA was still sub 60, actually almost 59,000. So the fact that we're seeing this move back down, eating into that vector candle does not surprise me. I think maybe even we head down, we take at least a 50% retracement of this vector candle. We see sub 60K again. By the time we've done that, I've got a feeling that the 50 EMA cloud's going to be back. Maybe we start to see that move back up. But if we have a look at if we take it on a higher time frame, have a look at some of this. But let's have a look, this move. That's not the one I wanted. It'll show me what I want. I wanted the 0.5 to the 50% level, which is there, which is at 59,500. So coming back into this vector zone there, I think that is a fairly logical move. Obviously, there would have been a lot of excitement. I got a feeling retail might have been trapped quite well. So that move back down for everyone to take their profits makes sense. But actually, when we do go on the 4 hour, we're down even lower. But, look at how far we moved. The 10, the 20, the 200, sorry, the 10, the 20, the 800, and the 50, all incredibly close to each other, within $1,000. And yet price action shot $2,000 away. So I can see it heading back down here and reacting. Maybe it gets down as low as 59,000. That's sort of where the 10 and the 20 are. Depending on how long it takes to get there, maybe the 50 catches up as well. But yeah, a good move from Bitcoin today. Just trying to see. I haven't done this. Let's have a look. Slow that down to there and down to there. Not really anything now. I was hoping that was going to show something, but it hasn't, to be honest, because we bust through the 618, but we turned around far too early for the 786. Maybe if we just put that on the daily, maybe that looks a little bit cleaner. But still, I mean, this one's got to close, so we'll give it a bit of a chance. If it comes down and closes below 60,000, I think we can kind of say that it's going to have some form of reaction off the 618. But again, I'm kind of putting TA on the back burner a little bit tomorrow. Let's move into it, and we'll come back to Bitcoin in a moment for this. So yeah, as I mentioned at the beginning, as everybody on crypto Twitter is talking about, we're talking about Discord, whatever, it's FOMC day tomorrow. So what's FOMC? So that's just where some old cronies get together and try and understand the state of the US economy and how they can manufacture monetary policy to try and, bring it into some sort of stable climate. And they do that with the federal fund rate, which is like our interest rate in the UK. And at the moment, it currently sits at 5.5%. It's been that for some months now, and they've been utilizing that as a means to try and control inflation, enter into quantitative tightening, and to bring the economy back into some sort of stable pattern. As I said, we have seen the data over the last few months with the CPI. I mean, it got to the highs of was it 7, maybe even 9%? Might have been that in the UK. It got pretty high anyway. But we're kind of down at 2.2% now. A lot of people are suggesting that the FOMC, missed the boat, and they actually should have started to reduce the federal fund rate prior to the summer break when we were starting to get that data from the CPI. But the fact of the matter is that we didn't have a meeting in August. September the 18th, tomorrow's meeting, is the first one since that. So we've had plenty more data that's come in that's kind of showing that inflation is still under control. I definitely would argue that perhaps jobs, unemployment, and payroll is just a bit of a thorn in the side because it's not quite where they would prefer it to be. Payroll still seems to be quite high. There's still plenty of jobs available. Unemployment's still relatively low. It sounds archaic, but really what they want to see at this stage is, employment rate climbing. We want to see pay, etc., sort of coming down, and not as many jobs available for them to be able to go, right, yeah, the process has worked. We can start thinking about reversing it. But anyway, that is what it is. And then we get tomorrow. Tomorrow, we'll get the announcement. And you can see on the Forex Factory here that the forecast at the moment is for it to drop to 5.25%, which is 25 basis points. And looking at the poll at the moment, I will keep it going. We've got a couple. We've got at least one person here who thinks there won't be a cut, which, hey, fair enough. But we're kind of 50-50 split at the moment, with people think it's either going to be 25 or 50 basis points. And I don't think that's an unfair judgment of where things sit just because of some of the data I'm going to show you in a moment. But as I mentioned, I kind of have to reiterate it, 7 o'clock tomorrow, we'll get the federal fund rate. You will see a reaction in the market. And for once, we actually might see a massive reaction in the market. Normally, what we've seen over the last year, because it's either gone up steadily or it's been flat, we've seen a little bit of a reaction, and it's always been about what Powell has to say 30 minutes later in his conference. But if we do get 25, 50, either one of those is going to give a statement of intent of how the US is going to try and tackle bringing down the federal fund rate to try and ensure that we don't the US enter into a recession, however they're formally defining it this time. And we have what a lot of people like to call this soft landing. Soft landing's good. It means that they can control the reduction of the federal fund rate whilst not increasing interest rates, not slipping into a recession, balancing all of the risk appetites that people like in terms of bonds and stocks and everything else. Very hard to do, which is why it's not quite such a simple process for the FOMC. But there's plenty actually of other news that's got to come out. I mean, tomorrow, in the morning, we've got CPI data for the UK. Now, they have already started cutting their interest rates, so we'll see whether or not that has started to have an effect that we can kind of see. We've got the monetary policy, and we've got another bank rate announcement on Thursday. And then in the US, we've got unemployment, which again, that one has been relatively sticky. I don't know for a better word at the moment for them to potentially deal with. And then one thing that I've sort of just been monitoring since the beginning of August, and it's just the Bank of Japan policy rate, because obviously beginning of August we had the increase from 0% to 0.25%, which caused issues with the carry trade principle, which led to a bit of a meltdown in the markets in the beginning of August. Pandemonium on the street, everyone was thinking all the positions were going to unwind. But interestingly, we are starting to see articles coming out here that are saying that Bank of Japan may actually have to continue interest rate increases up to 1%. Now, they go on to say that that might not happen in 2024, and it may well happen in 2025. So I don't think Fridays is an emergency need to be paying attention to this. But if either in the announcement of the rate we see it increase, or in their following press conference they start talking about when they are planning to increase it, we may start to see a similar kind of impact of people worrying about the carry trade principle, which I don't necessarily want to run through again. If you're interested in that, just go and check the video out from the beginning of August where I went over it in quite a bit of detail. But there's certainly still quite a bit of news that could affect whatever decision is made by the US tomorrow. Okay, let's have a look at this here. So this is FedWatch. This is a tool that is used to try and gauge sentiment of where we think the probability for the rate drop announcement will be. And I say the rate drop announcement because, as you can see here, there's actually only two bar charts. There's one on the right-hand side which says 500 to 525. That's basically indicating a 25 basis point drop. And then the one on the left, which is 475 to 500, that's the 50 basis points. There doesn't seem to be at the moment any indication of it remaining zero. So this has been interesting, and I don't really look at this too much. I do, but I don't really take too much from it. What I've been interested in this one at the moment is how much it has changed over the last 7 days. So a week ago, it was the complete opposite. So it was 34% thinking it was going to be 50, 66% thinking it was going to be 25. Yesterday, we'd seen that flip to kind of where the numbers are today. But actually going into last Friday, I think 50 basis points was as low as like 4% at one stage. So there really wasn't much faith in it being a 50 basis point drop. But suddenly that sentiment has shifted and people are thinking that actually that is the process it's going to go. And you got to remember that the stock market, I mean, all of the markets really, crypto, Bitcoin, it's just a representation of consumer confidence, of investor confidence. And because we've got this uncertainty, that is what it can potentially cause the volatility that I talked about in the previous news article, and volatility that we've seen before. And the reason of that is a 25%, why do I keep on saying 25%? A 25 basis point cut versus a 50 basis point cut send out two completely different messages. And those messages are all about confidence. So we can look at it this way. We're currently sitting at 5.5%. What the federal targets kind of alluded to is by the end of this year, they want to drop it by 1.25%. So they want to get down to 4.25. Okay, so that's 125 basis points drop. And that's how they're picturing in an ideal world to bring it down in a calm route so that we can have that soft landing. And then the other focus being that by the end of 2025, we're down to, I think it's 3% they want to get to. So 225 basis points over 10 cuts. Okay, so some sort of nice controlled measure. And that kind of allows for, on average, 25 basis points per cut, roughly. So that's kind of where they are looking at going. And the problem that you have is you've got two sides of the camp at the moment. You've got those in America that have kind of said, or looking at it from a global economy, you should have been doing this ages ago. The data has been screaming in your favor to do this. So the fact that you haven't, if we only see a 25 basis point cut, are you doing too little, too late? Whereas others may look at it and go, wait a second here, to do the first one off the bat at 50 when you only need to get, 125 this year and 225 over 10 cuts. Are you panicking because you should have done this earlier in a more controlled manner, and a larger rate cut is just sort of signifying another lack of confidence in the market? And so that's why it's just not quite as easy as just going, Chairman Powell standing up and going, sorry, we'll just cut it all the way down to 3 tomorrow. It doesn't quite work like that. So there is a fine balance that they need to look at. And for those of you that are ever interested in watching the conference, he will skirt around those questions and just point to the data and give a very bland kind of answer as to why it is. But reading between the lines there, he is trying to say, look, we've got to try and balance, bringing it down in the right time frame so that we don't, spook inflation to climb back up, whilst also not, rocking the apple cart or whatever with unemployment and investor confidence. And so that's how that balance is going to work. And I just don't know which way the market is going to read a 25 basis, or a 50 basis points. Are they going to freak out because 25 is too little? Are they going to freak out because 50 is too much? And unfortunately, we're not going to know that till probably 8 o'clock tomorrow night when the market's had time to digest that. And again, looking at probably what I've actually just gone and covered, but this is, I think this is one of the closest or most uncertain rate call announcements in recent history, certainly since they've been recording this, which granted it's only probably been about 10 years worth. And it has changed. I mean, even look at this one here, if you can zoom in on it, it was 59 and 41. It just constantly is moving around. But what I'm going to talk about in a moment now is that lack of confidence. We talk about the sharper cuts. They generally have been the ones that do, as this quote goes on to say here, that precede that recession. So, you've got to strike that balance of, do we set the narrative right that we're going to try and control this? It's going to be one sharp one and then we're going to stagger them down. And that gives us a soft landing. Or if we do it with a fast one straight away, people are going to get nervous and we're going to kickstart ourselves into a recession because we can't actually control the soft landing that we were looking at. And so, yeah, I will for once just be waiting and wait to see how the market reacts. Now, to put it onto the other side of things here, and it doesn't matter who this person necessarily is from this tweet, but it makes an interesting point, because a lot of people are going to look at this, and we're going to talk about this in a moment, about the potential doom and gloom of rate cuts and how that has impacted the markets previously. And we do need to, because, there's some very damning evidence. But to try and give at least one side of positivity towards that, I think this is summed up quite well. So when interest rates were 0.25, basically it was cheap to borrow money. You got to remember, as interest rates go higher, it is not cheap to borrow money. So when interest rates were 0.25, Bitcoin got to 69,000. Now, when interest rates were at 5.25, maybe even 5.5, and they were in quantitative tightening mode, Bitcoin still managed to get to 74,000. So even though it was expensive to borrow money, and the government was trying to do everything in its power to just sort of really put a stranglehold on risk on assets, we still managed to get a brand new all-time high. And he's saying, well, look, actually, if the banks start cutting rates, and it's not just the US are the last to the party here. Europe, UK, well, obviously not Japan because they're putting theirs up, but generally the vast majority of central banks across the world are cutting interest rates. So what he's just basically alluding to is, can you imagine what the opportunity that is available to Bitcoin when we start to see the cost of borrowing money drop down? And I think that is a fair comment to say. I do think there's one other factor that needs to be considered in that. We are going to move on to talk about it. But just to throw a spanner in the work, old Lizzie, Elizabeth Warren, she's can't stay out of this. So she's actually written to the FOMC yesterday, and she has strongly urged them to go for a 75 basis point reduction. Now, when we talk about levels of confidence and we talk about knee-jerk reactions, it is my assessment, and I bow down to Elizabeth Warren's knowledge on all of this, but 75 basis points from what I'm reading, what I'm seeing, if 50 basis points is going to scare the market, 75 is going to absolutely petrify them, and that probably is an admission. I mean, she goes into a letter suggesting that it is too late and they should have done this earlier, and for the Federal Reserve to then sort of almost accept that, rubber stamp what she's put in this letter by going with a 75 basis point reduction, I think is definitely going to send a message to the market that they are panicking, they're worried they haven't got this under control, and they're worried that they're not going to be able to avoid a recession, which, as I said, it's all a confidence game. And if that's what the central government are laying out, that's where the fear is going to be. So that's why I had 75 basis points on my poll, because good old Lizzie, and it wasn't just Elizabeth, it was Sheldon Whitehouse and John Hickenlooper. Can't say I really know who those two are. They're the people that put their names to this letter asking for that to happen. But let's actually have a look at sort of interest rates laid over on charts. So this is US interest rate. It's on the monthly at the moment. It goes back a long way. We're not necessarily too worried about that. We might have a look at it a little bit later on. What we can actually see is we're kind of at levels just slightly above where we led up into the global financial crash of 2008, but we can kind of see how it raises up, and then we see these sharp drop-offs here, and you can imagine what it is. So we've got the Fed increasing rates as they go up, a bit of a pause whilst they consider to try and see what the data's doing, and then when they need to change it, they start to bring it down. And you can see it might be a staircase up, but it's a full-on lift on the way back down. These drops seem to be a lot sharper. I mean, they maybe a bad example of where to have this, because the financial situation we had in and around 2007, 2008, Fed had to make some pretty bold moves to try and get that under cover. So we went from, 2 to 0.25 in effectively one move. And then we stayed that way for best part of 9 years. In 2016, we started to raise interest rates again. But guess what happened? We had something come out of China, and that caused them to change their monetary policy again. And we saw a massive reduction, again, this time from just under 1.75 down to, again, 0.25 in one move. We saw the money printers turned on, and off we go. And this is kind of where we are at the moment. And there have been some big moves up, but as we've got closer to dealing with it, because inflation just spiraled out of control through 2022, so we had to kind of take some big steps. I'm talking about the royal we here. We've seen that they've started to taper off, and then we've had months upon months of it just flatlining. What we're now expecting is to start to see that ticker down. Now, it doesn't really mean anything with this on its own, and of course it's not why I put it on there. But let's just initially overlay it with the S&P. And the reason I'm doing that is because Bitcoin obviously hasn't really been around. The only time that Bitcoin's experienced this has been in that 2019, 2020 correction. So not the one we necessarily need to have a look at. But if we overlay the, why are you doing that to me? There we go. So if we overlay this here with the S&P, we can kind of get a bit of a picture of ultimately what's happened. And you've seen this in Discord, you've probably seen it on YouTube, you've seen it on Twitter, whatever. That what we kind of get is, after a pause, once the rate cuts stop, the markets, risk-on markets, S&P, NASDAQ, whatever, they don't boom. If anything, they do the exact opposite, and they fall, and they absolutely correct. And we will go back and have a look at a few. But look, 2019, we started to see the rate cuts. Now, there was a move up, I will accept that one, but then we saw that correction all the way down. Markets reacted. Might be an outlier there because of what happened in China, but it certainly corrected. Go back to the financial crash 2007, and what do we have? Strong interest rates coming up, markets still climbing up whilst interest rates were climbing. We had that plateau as they started to reach a new all-time high. Well, actually, rates dropped, then we got an all-time high. Markets then absolutely dumped. And it was, I mean, this is the monthly chart here. We're talking year and a half later, we finally find the bottom and then we climb out of it. Similar kind of thing in the .com. So we get up to here, rates start to cut, market starts to drop away. We get down to a base bottom, markets start to recover. And this is the same story, across all of time. I should have done this a little bit better. You can line them all up. Rates drop, market moves down. You know, rates come down, so this moves down this way, markets move down. I think this is on linear. It is. It's on linear instead of logarithmic, while the S&P one's on logarithmic. So maybe that doesn't look like a big move down, but it still moved down. So when rate cut here, stagnates to be fair, but then rate cuts continue, market moves down. I think we get the point, but you can see where it is. So what's that really telling us? It's telling us we've got to prepare for a move down. But that's not really what we're looking for, is it? Because I don't think looking at interest rates on its own is going to give us the picture that we want there. We kind of need some, well, what's the catalyst for turning everything around? Reality is previous incidents that have occurred, and I think if it's not a 100% hit rate, it's probably a high 90% hit rate, with interest rate cuts mean sharp pullbacks on the markets. So what is the catalyst that turns it around? Well, typically, actually, oops, that's not what I meant to do. Seems to be the injection of cash. Now, I can't get an indicator that goes back any further than 2002. So I apologize that we've only got a couple of data points from this, but I think Simon's going to talk about this a bit more at the cuddle. So maybe he can find some sort of a little longer notice. But we can kind of see, you go into 2008 financial crash. So we've had the red, remember, is interest rates coming down. S&P is falling with it. This now is effectively the money printer, okay? So the Federal Reserve printing money. If it's going up, they're printing money. If it's going down, it's quantitative tightening. They're taking the money out of circulation. And so what do we see? We see that the markets are dropping. We see that interest rates are dropping. The turning of the printer doesn't initially turn the markets around, but once we know the money printer is on and interest rates have stabilized at whatever level they're going to be, that's what kickstarts the markets. We see that move up. We've got a flat period here of interest rates pause, but the money printer's turned on, S&P starts to move with it, okay? We start to see that interest rates start to climb. Well, that naturally means that we're going into some sort of tightening measure, so the money printers turns off. And then what do we get? We get rate cuts start to happen. Money printer is turned back on, but it's not until we get the flat rate that we start to see flat rate there. Money printer is still on, and obviously with the global crisis that we had, the money printer was turned on ridiculously then, and off it flies. And we've seen that. And what have we seen at the moment? We've seen interest rates climbing up and up and up. We've seen money printers turning off, so we're tightening mode, and we're about to see the rate drop. So, we're here. We're here, This is not a good place initially for us to be based on past data, suggesting, what we need to get excited about is, yes, this comes down, but we need to see it go flat. Yeah. And then what we need to really see as well is at some stage this will go down, that turns on. Okay. And only then, this will go down. So I should have drawn a bit more stagnant. Then we can start to see it climb back up. So for me, it's a two-pronged attack, unfortunately. Yes, interest rates coming down, generally suggesting that we're coming out of these quantitative tightening kind of eras. But until we actually get that money printer turned on, it's not going to be done. What we do have in our favor, potentially this time, is an election. Now, that doesn't sound like something that was necessarily favorable, but ultimately, whoever wins will have made promises for those to have won, and they're going to need money to do that. And with favorable conditions being talked about by both sides of the podium, whatever you want to call it, inflation generally under control, that gives them the leverage to be able to turn the money printers on. But I dare say they'll either need to take sharp steps to get down quick enough to be able to turn it on, or we will actually see what will happen is we'll have someone new in office regardless if it's Republican or Democrats, come January. And then they normally talk about their first 100 days, don't they? So we've got like 3.5 months. So let's just say that's beginning of April. Maybe we start to see an opportunity for that to turn on. And that's actually about 6 rate cuts, which is a decent amount that we can get down. If we do throw a few 50s in there and we throw a few 25s, we could get down that 225 in 6 rate cuts. It is definitely possible. So something else to just bear in mind. The only other tracker or thing that I saw here, which kind of just sort of emphasizes the point about it's when we have quantitative easing. Okay, so flat interest rates and the money printer turned on, these shaded areas are periods of quantitative easing, and you can see that's when the stock market has gone up. Now, if we throw Bitcoin on this, we don't get as much data to have a look at, unfortunately, but we can see that, you know, the bull run through 2014 and also 2016-17. Okay, it wasn't flying up there. Let me just make sure. Oops, that's not what I wanted to do. Apologies. I'm not going to do that. Let me just correct that. Oh, abort that. There we go. Sorry there. I was trying to put it on the logarithmic, but when we're talking about trillions, it'd take me forever to unwind that position out there. But again, the only time we really get to see with an interest rate cut is exactly what happened round about March 2020. We can see that lines up nicely with this quantitative easing. So money printers turned on period, money printers turn off, interest rates climb up, falls away. We were in the bear market. So it kind of is lined up. We've got one data point to go with. Not exactly the best, but hey, we hang our hats on the 4-year cycle, and that's only been 3 data points. So yeah, it's all we've got for now. Looking at some of the other things that we've seen, so this is just another visual representation of things I've just been talking about. Fed pivots leading to cuts. This one's all been all over Twitter for probably a year now, but we're finally at the point where maybe we can start to get to use it. And the reality of it is Fed pivots generally lead to corrections in the S&P in and around 27 to 50, 60%. And so with that in mind, given how closely aligned Bitcoin is to the S&P at the moment, or the NASDAQ at least, then we're likely to see whatever happens with the S&P going to happen to Bitcoin. Now, of course, there's even a part of my brain that suggests, well, you know, maybe this is the hedge. Maybe that's what people move it into. But I've been saying that since 2018, and it's not really been that hedge yet. Do I think that's where it's going to be going immediately from this? Probably not, especially with Wall Street involved within it. That's probably not where we're going now. And then we look at this one here. So this one, again, is another representation of that, but it's just on the tabular form. So the point here is an average of nearly 30% decline, but over 14 months, okay? We're in September. 14 months from now is November 2025. That's when we're talking about exiting the bull market, isn't it? So I think it's something to bear in mind. Of course, we had, you know, the 1969 recession, which only lasted 3 months. You could argue, because this one hasn't been updated, to the 2020 recession, which again was a very quick recession, maybe 3 months. Maybe that brings that average down to 12 months. We're looking at maybe September next year before we see a bottom on average. Just maybe that we need to rethink where our exit strategy is going to be if that plans out, and how we deal with it. And that's all right now. I'm not offering a suggestion. I'm just saying, based on data that hasn't really been wrong previously, the appetite for an all-time high may not be there. And it's because we need to know when the money printer is turned on. When the money printer is turned on, we know we can start to get excited again. But maybe without that, we really are going to be stuck with liquidity and moving that forward. Now, this one here, this is a guy by Brett on Twitter, Brett_ETH. He's actually really good at just offering his opinion on historic data. He's been talking a lot recently about the rate cuts. I know Bijan's been posting some of this in Discord as well, which I don't think is talked about enough. But I think a lot of the stuff that Bijan posts in there is absolutely spot on in terms of where we're going. It's just not talked about because it's not what we want to hear. but it doesn't necessarily look too good. Now, this is the .com versus the great crash, and the economic crash, global economic crash, 2007, 2008. And you can have a look, the first cut, all right? So what happened? The first cut on each time, we actually saw rallying, okay? Because, and this may be just a precursor for what we see tomorrow. We see it rally for a couple of months, okay? Forming new highs, and then it falls away. So there is some exuberance that we are starting to move towards, we can see in the future towards quantitative easing. So markets get excited. But then ultimately what happens is we get those corrections. And sadly, those corrections are fairly lengthy, as we can see across both of these charts here. And they're going to ultimately lead to not necessarily all-time lows, but significant recent lows. And we talk about here, if Powell announces a 0.25 cut, do you think the market could see a short relief rally? That was a question that was posed to him. And he said this wouldn't be out of the norm. So again, a short cut may be positive, maybe seen as positive, maybe seen as controlling this, a soft landing. Talk about some of the sort of metrics that go with it. Generally, it kind of agrees with that sentiment. We have a look at 2007 versus currently where we sit at the moment. Again, it's from the same gentleman. What he's overlaid here is the day of the cuts, which happened to be on the same day, 18th of September, and then where the markets were, length of rate cuts. So I think this was 10 rate cuts. And so he's forecasted that 10 rate cuts to be overlaid here. But the similarities we see at the moment is relative all-time highs for the S&P. As I pointed out to you today, we made a brand new all-time high on the S&P. Slight moves up, as I showed you in more detail on the last chart, and then price moving away. But the similarities get even eerier because the charts. So the rate cuts were the same day as we said. Unemployment on 2007 was 4.7. It's now 4.2, so pretty similar. US inflation rate year on year, 2.5 across both timeframes. US leading economic activity was 104 across both timeframes. Existing home sales were 4.5 and just under 4 million. Now, we don't talk about a lot of those things because one of them, they go a lot over my head. But there are a lot of similarities at the moment with where we see things and where we're going. And before you say we've got an election, well, they had an election. I know it was 2008, the election. I stand corrected, sorry. I was going to say they had an election then, but it was a year later. But the point again is if we do go on the 10 rate cut option to get us down to that sort of 3%, 2%, but we are talking middle of summer. So that's summer break 2025. Now, again, a lengthy decline in what we're considering 4-year cycle, bull year territory. But, recessions and rate cuts, they don't care about our opinion on the 4-year halving cycle of how many Bitcoin are mined every 10 minutes. We hang our hats on it. I hang my hat on the 4-year cycle. I talk about that a lot. But ultimately, the 4-year cycle is dictated not on the economic, global economic picture around it. It's dictated on scarcity of Bitcoin dropping, halving every 4 years. And that's it. And so this will be the first real rate cut. I appreciate we had that one in 2019 into 2020, but real rate cut with a potential for a lengthy recession that Bitcoin's ever faced. And so I'm not saying to shit the bed and cash out of Bitcoin. I'm saying we just need to be prepared for potentially where this may take us. And the honest opinion for myself is I don't necessarily know, hence why I'm going to wait. And this article came out today, pretty much summarizing what I'd mentioned. There is no certainty in how the market is going to react to either the 25 or the 50. We don't even know which one it's going to be. Forex Factory still saying it's 25. The CME FedWatch tool, let's refresh it, 63 at the moment. 65 now. Okay, not a massive move. But generally, most people in this one thinking it's going to be 50. So we can't even get our ducks in a row between the two biggest trackers that are there. What would I do, or what am I doing? To be perfectly honest with you, yes, I made a little short trade today, which I'm sure I'm going to talk about in a moment. But I'm actually just going to do nothing. Like, in less than a day, we'll find out if we're getting a rate cut and how much that rate cut is going to be. And that will give us an indication of how far we are going to get to the target that they want to achieve by the end of this year, which also, if we do start the rate cuts, is probably going to be announced during the conference. So my plan really with Tau, because I'm not fully back in Tau. Matter of fact, I'm now not in Tau except for what I kept right from the beginning of the move. I'm probably just going to wait. Unless the market dumps tomorrow and gives me a decent opportunity for entry, which then the risk reward is just too hard to turn up, I'm just going to wait. I will see what is said and I'll see how it works. And then I will wait for some volatility to get back in. And I think that's probably, for anyone that's out of the market, not a bad move. You know, with so much uncertainty of how it's going to move the market, plus it's a volatile day anyway on FOMC days. You know, you are just coin flip at the moment of getting in now. And yeah, okay, 50% chance that works for you, but it just as likely not to. So for me, I'm just going to sit on my hands and wait and see. I don't think we need to look at that one. But that's it. That's my view on rate cuts. Hopefully it answers some of it. Adam, you kind of asked me about rate cuts and 4-year cycle, which hopefully I've tried to address. Can this time it really be different? I don't know. I mean, the evidence suggests not, but Bitcoin hasn't seen it, so maybe it can actually prove the evidence wrong. Anyway, John's asked me to talk about TAI. Thoughts on this coin and how the coming unlocks. Now, I've got to be honest with you, John. I assume you mean TARS AI, but there are over 100 results with TAI, so I'm not necessarily too sure which one it is you are talking about, but I haven't looked into the coin. I think I did a while back, but I'll be honest, I can't remember because when on the website it looks familiar. But in terms of unlocks, just to answer your very direct question, this has got monthly unlocks now for a considerable amount of time. And it is every 14 days, sorry, every month, the beginning of each month, we're going to see unlocks of about 2%. There's so little out of the market that releasing another 2%, I don't think it's going to have any major impact on the price because we're just not dumping that much within the market. What you can do is you can go on cryptorank.io, type in TARS protocol if that's it, and you can have a look at the breakdown here of the vesting schedules. I mean, the team haven't started to unlock yet, but that will start to come out in November, so in 2 unlocks time. We've got Series B of pre-sale rounds and a few other ones, Series A, and I don't know what the Col one represents, but a lot of these have actually already started. But yeah, if that's how little they are unlocking each month, although it is monthly, I don't necessarily see it having a massive impact on the price on the day of unlock. But it is just really about, do these change once the team get a go at it, and you know how much the team have the overall percentage. It says 10% there, but can they dump 9% of that 10% on unlock 1? I don't know. So yeah, something to have a look at there for you. Right, I said it'd be an hour and it's already over. So, but I'm not finished. Interestingly enough, whilst we've been chatting, Bitcoin has actually dropped below 60k, which, you know, still got 4 hours left today, so no victory dances yet, but we have moved back down. We're pushing back down towards that 50 EMA. We're now below the 618 I talked about at the beginning of the stream, and we are now, if it was close like this, not making a higher high on that one there. So plenty of stuff to look at, but let's have a look at Tau. We'll have a look at cows and then we'll probably knock it on the head. So Tau, what happened for me last night with Tau? Well, we had this move down, and my honest thought was we hit off the 0.5, we hit off the 50 EMA, we hit off the 20, and we didn't quite hit off the 10, but it seemed like a good time to get back in. And my plan was to hold it until we hit the 200 EMA, which I didn't know how long it would take. But today it actually did hit that 200 EMA. And I just was like, it's a short-term move, just in the hope of an opportunity of being able to like squeeze out 5 or 6 more Tau, whatever it may turn out to be. And so once it hit it and I started seeing it was pulling back, I just sold. And that was it. My view at the moment, despite that very strong move, was I still want to see it close and consolidate above the 200 EMA on the daily, which it hasn't done for some time. So that's what I was ultimately waiting for. So I am still out of towel, got a little bit extra money to buy some more towel with next time, which ultimately has taken my average sale of 320 to I think about 333 now. I haven't done the figures on Delta, but I think that's roughly where that sits. Might be a little bit less than that if I'm honest, but still relatively decent position that I can at least sit on right now. But let's have a look at what towel has done, because that yesterday, the weekend's move, Saturday, well, all last week, strong move up. And it paid no respect really whatsoever to a lot of the EMA levels on, the fib levels on the daily chart. And we had that huge move up on Friday into the weekend Saturday with a lovely low test there. But what does it hit? It just hit the bully that is the 200 EMA. And so it came crashing back down. And again, didn't really respect the 618 in its falling, but it did have a bit of a bounce off the 0.5, moving back to the 50 EMA. And what I was thinking was, actually, that's a fairly solid, move up there, 50% retracement, roughly. It's actually about 40% retracement running into the 50 EMA. So, it's kind of looking pretty good. If we go on some smaller time frames, let's get rid of the fibs. I think we talked about that enough. And again, I wouldn't necessarily say it's a W pattern, but there's definitely some bottoming pattern here. Move up, consolidation, move up. And this one's come down. It's kind of thrown me again. In terms of, it just doesn't feel like this pattern is working as well as I would necessarily like it to. Again, similar to Bitcoin, when I drew it earlier on today, I was thinking, was that a W formation, an M formation up here and leading to the opportunity? But this move back up today has suggested anything but that. Now, there'll be people out here that say, is this just a false move up, trying to get people excited before FOMC? And it could well be. The speed at which that climbed up just to me suggested that we were going to see some form of retracement. And the move back down for the last 4 hours, it's not even created vector candles. It's just been a steady move back down onto the 10 EMA, and it is starting to, find some support there. But I personally wouldn't be surprised to see it come back down to at least the 50 EMA. There are these vector zones down here, but taking it all the way back down to the daily opening, I mean, that's going to look like a hell of a high test if that was the case. So if that were the case, then I would then be wondering if it was some sort of 4-hour M formation and a real potential bloodbath one. I wouldn't even call it an M formation because it hasn't had the moves up, just a double top, which, yeah, if that was the case, then, we could see a strong move back down to maybe these recent lows down here at 250. But let's just see that one. Standing currently at the moment, if and when I do fully go back in it not being a trade, I promise I'd let you all know, and I will do. I have actually been out of towel, and it is now a balance of, I've been out of towel since before this August drop. So well over a month and a half of daily rewards, and so actually there's a kind of a, not just a risk to reward, but a cost opportunity lost benefit that I need to factor in whenever I do buy back in, because I could have just earned as much stake in it had I have not moved about. But I've not really been following the staking, so I don't know what the rates are like. Looking at CAS, we're actually on the 4-hour here, and this looks better. This move up, okay, fairly decent over the last few days. Pull back to the 50 and the 200 EMA, exactly what we want to see. It's why we've been impressed with CAS. It's moved up again today, but not being able to retake that vector. But what's it going to do here? Does it come all the way back down, form some sort of double bottom here, build itself back up? We'll have to wait and see. Battling with the 10 and the 20 at the moment, which historically has held it quite nicely. So maybe it is just a breather before that move back up. I think we're talking about maybe getting to, let's have a look. We wanted 20 by the 20th. Is that right? I'm sure someone in chat will tell me. That's going to be a strong, that will look like a strong move on the 4-hour to get to this point here. What we should say really, actually. move this because it could be any time on the 20th, couldn't it? So there. Maybe not as bad. Reese, I will do in a moment. No problem there. Fetch, I'm not in. I used to be in it. I'm not, and I do want to get back into it, which is why it's on the potential buy list. But yeah, so I'm still, nothing's really changed for me on Casper. I bought some more over the weekend. These are just constant buys to try and buy back the original bag that I sold at 12 cents. And, my average buy at the moment's probably 16. So I'm not being able to get it all back, but I've changed my tune on it. Just because, as I've mentioned plenty of times before, if you can see an altcoin that in this Bitcoin season time is still outperforming, imagine what that's going to do in alt season. So this is one that I think is definitely worth holding. I would argue it's a much stronger prospect just on its recent history than Tau, although Tau, in my eyes, has plenty of more use case and memeability in an actual alt season market. I still am not enamored with the silver of Bitcoin approach that Casper was founded upon. But anyway, we'll leave that one there. I'll be dragged into it. Let me just have a look at Bitcoin dominance, then I'll have a look at Fetch. And again, Bitcoin dominance, put it on the daily. Recently crossed the 58 level, and as I said, continuing to climb all the way up. We are running into where we were back in end of 2020, but then Bitcoin had that run up when it broke through 20k and then 40k about 4 weeks later. But there's a lot of activity between 58 and 60k. So if we do want to see some form of turning around, that's when it's going to unfortunately have to be an ETH BTC. The last time ETH BTC was at this was when the 15th of April, pretty much all-time high, not all-time high, 64k level for Bitcoin, and that run up in the early 2021. So real lows here. And if Ethereum is the litmus paper for the altcoin market, it's not looking good. It really isn't looking good, and it's not looked good. I mean, take it back. Where it's just been downtrend since September 22, really. So all through the bear market, it's just been falling, but really falling off a cliff recently. Now, some may argue that getting down to these levels, we may start to see it climb. For me, unless it pulls its finger out, why can't it come back down to this base support here? Which is what, at 0.03 instead of 0. Just under 0.4. So I don't own any Ethereum. I've not really ever been a big fan of Ethereum. Maybe, as I touched on last week, it isn't the litmus paper for the rest of altcoins. Maybe things like Solana and BNB have overtaken it. But yeah, not looking particularly great right now. Fetch. So come and have a look at this. So again, with Fetch, we've, what I will say from, recent things, we'll zoom in so you can see it a little bit better. But a bit like how Tau had done, good base there. Arguably bouncing off the 800 EMA. I know it kind of dipped below, but it's holding something there. Moved up, moved down, moved up. So as we see things at the moment, base, higher high, higher low, higher high, and this was a higher high on the closes. Okay, pulling back. Now, of course, we could see that form down to a double top. So what we need to see over the next few candles is we need to see it close above $1.07. It bottom at over $1.07 and make that move up. Okay, and we can confirm the trend is that way there, negating a double top. In terms of fib levels, I'm not sure where you want me to take it from. I don't know whether to do that. That is obviously looking at where we could pull back now. So moved up, hit that level, come back down. Kind of respected a lot of these ones here. Certainly on a 0.5. Come back up and touch the levels we're marking now, and it's hitting the 236. Not a big one. I think the I mean, the 50 EMA for me is more attractive right now. We're fading out the 382. If you were to do it that way, and if you have a look on a much grander scale, I mean, it's taking it a long way back now. Have a look at it from this. So it's obviously top to bottom. Again, definitely some respect in here, but battling the 382. Also today, rejecting off the 200 EMA. There, let me just put this on the weekly, clean it up a little bit. I might drop it onto the 3-day. Just because we're looking at it from such a long period of time. But actually, when you look at it on the weekly now, those levels kind of work quite nicely. So bit of work to do on the 382. It's not actually broken that 382 level since July, which, if memory serves me, is probably just after the merge. Also, we got the 20 EMA on the weekly, so pretty strong EMA there, just holding that one back. But it is bouncing between the 20 and the 50 EMA, so something to dig into there. Right, my teeth are absolutely killing me, so I think I will knock it on the head there. Never get dental surgery when you have to have a live stream. Definitely not worth it. That being said, I think there's obviously still time to book onto the cuddle for any of you that haven't yet but want to just randomly turn up at the last minute. I'm just giving one talk there. I'm arriving Friday night. I'm going to stay Saturday night. So we're looking forward to just catching up with everybody and just seeing what everyone else's views are on the crypto market and where everything is going. Still seeing ourselves pretty much 50-50 split on the 25 versus 50 basis point drop. As I say, tomorrow, even if you don't normally care about FOMCs, just keep an eye on the charts. 7 till 8 o'clock. 7 o'clock the rate comes out, 7:30 the conference. Usually lasts about 30 minutes. Gonna see some volatility. But just take note on how much is cut and what the targets are both for this year and also for the end of next year, if those things get announced. That will give you a flavor for how confident the market is, where those ones go. And yeah, other than that, can't wait to see you all on Saturday. Failing that, if you've got any questions, obviously, as usual, hit me up in Discord, and I'll get back to them as quickly as possible. And for everything else, just enjoy the rest of your evening. So speak to you all soon. Cheers now.